As of this moment, shares of Critical Metals Corp, ticker CRML, are trading at $23.28, which is an absolutely staggering move of over 55% to the upside on the day. An intraday explosion like this immediately grabs headlines and fills trading forums with speculation. The common expectation when you see a chart go vertical like this is that you've either found the next big thing or you're witnessing a purely speculative frenzy, a pump-and-dump scheme fueled by social media hype. Many investors, particularly those using accessible platforms like the Robinhood app or SoFi Invest, might see this as a signal to jump on board, fearing they'll miss out on easy gains. The reality, however, is far more complex and rooted in the very specific high-stakes world of strategic resource extraction and the convoluted mechanics of post-SPAC trading. This isn't just random market noise, it's the market attempting to price in the geopolitical significance of a European lithium mine against the backdrop of extreme stock volatility. Let's ground ourselves in what we're seeing. The general belief is that a stock moving 55% in a single session is a sign of overwhelming positive news. Perhaps a major contract was signed or a groundbreaking discovery was announced. While positive sentiment is clearly the driver, the magnitude of the move suggests other forces are at play. The deeper take is that Critical Metals Corp is a recent graduate from the world of special-purpose acquisition companies, having merged with European Lithium. Stocks that emerge from SPAC deals often have a small public float, meaning a limited number of shares are available for trading. This creates a tinderbox environment where a sudden surge in buying interest, even a relatively small one, can cause an outsized price reaction. The volume today is significant, but it's acting on a constrained supply of shares, amplifying the upward pressure. This isn't the same as seeing Apple stock or Nvidia stock move. Those are behemoths with immense liquidity. This is a very different kind of instrument, and treating it the same way is a recipe for disaster. Investors using sophisticated tools on interactive brokers might be tracking order flow and float data to understand this dynamic, while those on simpler investing sites might only see the green percentage and get drawn in. The intraday trading pattern has been one of relentless buying pressure, gapping up at the open and grinding higher throughout the session. There haven't been significant pullbacks, which indicates a powerful, sustained interest today. But who is doing the buying? It's likely a mix of retail traders attracted by the momentum and potentially some smaller institutions establishing a position in what they see as a strategically vital asset. The narrative around securing non-Chinese supply chains for critical materials, especially for batteries needed for cars like those from Tesla, is incredibly powerful right now. Governments are pushing for it, and the market knows it. This move is part of a broader reevaluation of resource companies that are geographically well-positioned. However, we must distinguish the narrative from the company's current operational status. The expectation is that this price reflects a thriving enterprise. The reality is that Critical Metals is still largely a pre-production story. Its value is based almost entirely on the potential of its Wolfsberg Lithium Project in Austria, not on current cash flows or earnings. This makes it a high beta play on the future price of lithium and the company's ability to execute its mining plan. This is where the risk management services of a firm like Fidelity Wealth Management or a diversified approach like Schwab Intelligent Portfolios becomes so important. Holding a highly speculative single-asset company like this in an individual brokerage account requires an iron stomach and a clear understanding of the risks. The sector momentum is certainly favorable. The entire green energy and electric vehicle supply chain is under scrutiny, and companies that can provide the raw materials are in the spotlight. But this also means the stock is highly sensitive to macroeconomic headlines. Any hint of a global slowdown that might dampen EV demand, or any shift in European Union policy regarding mining permits, could send this stock tumbling just as quickly as it rose. The current excitement is pricing in a very optimistic future, one where the Wolfsberg project comes online smoothly and operates profitably. The path from a plan on paper to a fully functioning mine is notoriously difficult, filled with potential operational hurdles, cost overruns, and regulatory delays. Anyone looking at this as a simple online investment needs to be aware that the road ahead will be anything but smooth. So what exactly is Critical Metals Corp? Following its business combination, the company's primary focus is the Wolfsberg Lithium Project. The goal is to become one of the first major producers of battery-grade lithium hydroxide within the European Union, positioning itself as a key supplier for the continent's burgeoning battery and automotive industries. The business model is straightforward: mining. Extract the spodumene ore, process it into lithium hydroxide, and sell it to battery manufacturers. The project is purportedly advanced, with significant exploration and planning already completed. The expectation, heavily promoted during the SPAC process, was that this project would offer a secure, local, and ethically sourced supply of a vital component. This narrative is incredibly appealing. The reality of its past performance as a publicly traded entity is very short and defined by the extreme volatility typical of post-SPAC companies. Before this massive run-up, the stock experienced periods of sharp decline as the initial merger excitement wore off and the market began to grapple with the long timeline and significant capital expenditures required for mine construction. Many investors who bought into the SPAC early, perhaps through Fidelity brokerage or SoFi, are likely still underwater, even after today's move. This history is a crucial reminder that what goes up this fast can come down just as fast. Looking forward, the potential catalysts and risks paint two vastly different pictures. The bullish scenario, the one that today's price action is screaming about, is that the company successfully secures the final permits and financing to begin construction. Any positive drilling updates that confirm or expand the known resource base would be another major positive. An offtake agreement, where a major battery or car manufacturer pre-buys a significant portion of their future production, would be a massive de-risking event and could send the stock even higher. Imagine if a major European automaker publicly partnered with them. That would validate the entire thesis. This is the future that has buyers on platforms from Robinhood stock trading to the most sophisticated institutional desks. The company would transition from a speculative exploration play to a tangible development story. However, the bearish reality is just as plausible. The primary risk is execution. Mining projects are infamous for delays and budget overruns. The geological and engineering challenges are immense. Furthermore, securing permits in Europe with its stringent environmental regulations can be a prolonged and uncertain process. Local opposition, while not currently a major headline, is always a potential threat for any mining operation. There's also commodity price risk. While lithium demand is expected to remain strong, the price of the metal itself is notoriously volatile. A sharp downturn in lithium prices could make the entire Wolfsberg project economically unviable. Then there is the financial risk. The company will need to raise substantial capital to build out the mine. If capital markets tighten, or if the stock price falls, raising those funds on favorable terms could become difficult, leading to shareholder dilution. This is why it's not just a simple matter of self-investing. It requires a deep understanding of commodity cycles and project finance. Comment below with your honest take. Do you believe European governments will fast-track mining permits for critical materials, or will bureaucracy remain the biggest hurdle? In summary, the story of Critical Metals Corp today is a perfect illustration of expectation versus reality in financial markets. The expectation, fueled by a 55% intraday surge, is one of overnight success and a straight line to the green energy transition. It appears to be a simple, powerful narrative that's easy to buy into. The reality is that this is a high-risk, pre-production mining venture that just completed a volatile SPAC merger. Its future is entirely dependent on the successful, on-budget, and on-time execution of a single, complex mining project in a tightly regulated jurisdiction. The excitement is real, but so are the risks. Book disclaimer. This video is for educational and informational purposes only. It is not financial or investment advice. Always do your own research and consult a qualified financial advisor before making any investment decisions. Please like, comment, share, and subscribe for more stock market updates.